thought the most interesting aspect were, well, there were two. One, they were noting that commodity prices have fallen significantly, and consequently they were probably a little bit more forceful in their language on the exchange rate. Last month they said, mightn't have the words exactly right here, but something to the effect of it would be helpful, or it's not offering as much, the exchange rate's not offering as much assistance as it should be, given the fall in commodity prices. And this month they're a little bit more forceful, noting, it needs to go lower.
And that Aussie dollar did kick up briefly, but from what I saw, it was trading a new intraday low soon after the statement, wasn't it?
Yeah, that's right. I mean, did you expect to see that bounce? I thought that was a bit bizarre.
It seemed a little strange. Maybe some people were expecting the RBA to be a little harsher, but I mean, it did acknowledge that commodity prices have fallen sharply, and it no longer said that that commodity prices were historically high, did it?
Yeah, well, that's right. I mean, what was your take? Would you? I mean, to the extent that you can classify it as dovish or hawkish, do you think they're a little bit more dovish or hawkish, or just sort of?
Well, it was a very brief statement.
Old,
I'd say overall, they're not gearing up for a change anytime soon. I mean, we did see one economist break ranks today, didn't we, and look for a cut?
Very interesting. Yes, that was Deutsche Bank, wasn't it?
Yeah.
And so that was 2 cuts, which, it's, I think with the collapse in commodity prices, it's not such a strange call. But I think you would need to see more than just a fall in commodity prices for that to happen. Because, look, we got some partial indicators out. Well, we've had them over for the last couple of days, and it looks like GDP could be quite strong tomorrow. So it would seem bizarre if you've got growth around trend for them to cut twice more. I mean,
yeah.
But look, with that fall in commodity prices, it's not so unusual. Yeah, I mean, are they the only bank that's forecasting?
Well, from what I know, the local economists are all expecting a rate hike next, except for Deutsche Bank.
Yeah.
But market pricing is certainly leaning towards a rate cut. So,
it's
like
an interesting
yesterday,
split, isn't it?
We had the market moving towards more than 70% chance of a rate cut next August. So, I think it's certainly leaning that way.
Yeah, look, I think from my perspective, when I look at it, as an economist and plug my models and all that sort of stuff, that split reflects, I guess, different views as to how important the terms of trade is to the economy. If you're of the view that the terms of trade and the fall in iron ore prices, etc., is the key driver of economic growth, then I guess it makes sense to forecast cuts. But if you're of the view that, well, hang on a minute, mining's only 10% of the economy and a lot of that's owned by foreign companies, services is 80 or whatever it is % of the economy, and they're doing quite well, maybe be more inclined to be of the rate hike view. I mean, it certainly makes for interesting times, and maybe get some interesting market moves early next year.
Yeah. Thanks, Adam.
Thanks, David.